Now, as we go to the Asian markets, we wanted to start off quickly with India and Taiwan as an example, and we're going to go to some of the others later on, including South Korea. But when you look at India, you can see that the PMI composite came down a bit month over month. Prior, 58.2, composite came in at 55.1. On the services side, went from 57.2 to 54.3. So that is the acceleration to the downside. It's still positive, still growing, as we showed the last week and the week before, where India is still in that bright spot versus China, but we see that, again, really accelerating to the downside as we've been seeing with industrial production, which in August was expected to be up 1.7%, came in negative 0.8. And then if you look at the September data, we expect that to, again, move to the downside again on the industrial production side, and then see that pressure really continue through the end of the year. But it's still kind of bumping along the bottom, not quite in contraction, not quite in expansion, but obviously, as we've been talking about, inflation continues to be the issue. Last month, it was 7%. The expectation was for 7.36%. Instead, it came in at 7.41%. And we saw an acceleration in inflation across the board, especially on the ag side. And now they're talking about not exporting wheat, which would be the first time in a long time, and potentially even importing wheat. And again, so far the imports is speculation, but they're putting gates up in rice, in wheat, because they're struggling with their harvest and they want to make sure that there is enough for the local populace. But there are a lot of countries that rely on that excess coming from India to be sold into the market so that they can purchase it, which, as that goes away, becomes a bigger and bigger problem. So then when you look at Taiwan, when you look at CPI, you see that acceleration across the board. But then look at the trade balance and the exports. So exports declined. They were expected to be up 2.4%. They declined by 5.3%. And imports followed a similar trend. Instead of being up 9.8%, came in negative 2.4%, which is showing just how, again, that acceleration to the downside is picking up steam. When you look at the Asian markets, a lot of this is based on technology, tech in general, and a lot of that pressure is rolling through. So then when we look at China here, you can see that the PMI composite for Caxton was expected to be at 53. Last month it was 53, came in at 48.5. And the PMI services was expected to be at 54.4 and came in at 49.3. So you get this view where everyone rushed out once a lot of these COVID restrictions were lifted, and then now they're back. They've got what they needed and they've slowed down. So it's back in contraction, which is a bigger issue when you go forward. And we're going to talk about that in a little bit and how that's going to get factored into the Chinese Communist Congress. Aggregate financing increased across the board, which is a positive. But then when you look at money supply, you saw it slow down just a bit. Now, foreign reserves were above estimates, but below where it was month on month. And it's important because, and again, right or wrong, I'm not sure, 3 trillion is a mental number, where if they fall below 3 trillion, I expect to see more international panic. So if they came in at 2.99, that would have created much bigger concern than a 3.02. And I think that's going to be an important one to watch of how is China going to maintain those foreign reserves. And it's going to be by selling treasuries and buying dollars, which again is going to keep that bid in dollars and going to keep that pressure on treasuries in general. Now, an interesting thing came out when you look at the view, because there's been some rumors that Xi was going to talk about doing away with lockdowns at the Communist Congress. But then you look at the job market. So Shanghai Pudong New District announced it is hiring 575 specialized community-level COVID prevention and control workers on 2-year contracts. So COVID jobs in Changjiang district come with a list of responsibilities similar to some of today's run-of-the-mill zero COVID rules, including implementing COVID community level pandemic control, recording the information of residents, improving the pandemic prevention network, mobilizing community residents to form pandemic control volunteer groups, liaison with corresponding government agencies. So they're hiring people to do zero COVID work on a 2-year contract. So there is a lot of evidence, and this is just another data point. There's a ton of evidence on how zero COVID is not going away, and that's, I think, something that has to be kind of factored in. And we don't see that big U-turn going into the 20th Party Congress. Now, some key things. So one of the big pieces is going to be, will a successor be appointed? So there's pretty much a foregone conclusion that Xi will get his third term, but typically the Xi will the person in charge, the president, will pick their successor. So if he doesn't pick a successor, that would be, well, he expects a fourth term. So if Xi plans to step down in 2027, tradition dictates that he would appoint a successor to head the secretariat of the party's central committee at this year's Congress. Indeed, this is how Xi and his predecessor, Yu Jintao, were made heir apparent to the party's secretariatship. So again, that's going to be a key one to watch. Is there an appointment? At the Congress, some other things to watch, whether Xi revives the chairmanship. The position of chairman of the CCP was established in 1945 by Mao and represented his unquestioned leadership to the party. The position was gotten rid of in 1982 in favor of the more limited general secretary as the party instituted a collective leadership system. Should this come back, again, that would lead down to, well, is he not going to pick a successor? Whether Xi is referred to as the people's leader or helmsman. In December 2019, a Politburo readout referred to Xi as the people's leader, a title previously held only by Mao and his successor, Wei. So why all of this really matters, and some of the key things when you look at it is, like, for an example, whether Xi Jinping thought on socialism and Chinese characteristics for a new era gets shortened to Xi Jinping thought in the party constitution is important, because when you look at Mao, they had a long thing and then they shortened him. It would put him on a same level. So should Xi's thinking get shortened at the party Congress, it would put him on par with Mao in the party pantheon, which is, again, important in terms of trajectory. It would also imply he's still supremely in charge of the party. Conversely, if the abbreviation doesn't happen, it would mean Xi still faces resistance within the party. So again, a lot of semantics to watch as we go forward. At the Congress, China's economic czar, Vice Premier Li, will retire from the Politburo. He will also need to step down from his vice premier position when the new government is announced. As outlined, Li Keqiang will need to stand down as premier when the new government takes over in March. And again, his replacement will be very important. And another key thing is going to be Taiwan policy. So in recent months, long-held assumptions about the cross-strait status quo have been brought into question, U.S. obviously reaffirming. So now the most significant development is going to be, does China provide a timeline on when they're going to reassimilate? Or as the Congress may simply reaffirm Beijing's commitment to the cross-strait status quo, or rather less likely extend an olive branch. So again, that's going to obviously be a key piece to watch. And then finally, a key one back to the consumer, how will common prosperity be conceptualized? So common prosperity, the party's drive to achieve greater economic equality, has been obviously a key topic since the Central Commission for Financial and Economic Affairs held a meeting on the subject in August of 21. It's important, but how does the party intend to implement it? So some have argued it should be a status project to forcibly redistribute wealth. Others have insisted it should focus on liberalizing reforms to foster greater equality of opportunity, which, again, Deng's view of let some get rich. They expect to hear more, and why it matters is because common prosperity is one of China's most important policy shifts in decades, with the potential to completely restructure the economy. The trajectory that shift takes will profoundly impact how China's economy and business environment take shape. So now when you look at why that's so important, service side of the economy is now in contraction, and look at employment. Employment is heading in the wrong direction. So do you give those people opportunity to make money, or do you try to finance them by some sort of redistribution? And this is that back and forth that we continue to see as the party as we get closer to how is this going to shape the future of China. Now, China aggregate social financing, monthly new aggregate social financing came in at 3.5 billion yuan, 3.5 trillion yuan in September, a significant increase on the 2.4. This was above both the consensus and the forecast. Monthly yuan loans jumped to 2.47 trillion from 1.2. But the credit acceleration was mainly seen in corporate loans, which climbed to 1.9 trillion in September, a $1 trillion increase from August. As a comparison, lending to households rose to 646 billion, just 188 billion higher than August. So you saw, again, all of these things have been pushing for more borrowing, but you're still seeing the household as the laggard in that. And on the corporate side, it's going to be important of were they corporates directly or SOEs, because in this, it's putting them together. But a lot of this is coming on the state-owned side in terms of that backing. The People's Bank of China added a net 108 billion yuan in pledged supplemental lending last month for China Development Bank, Agriculture Development Bank, and Export-Import Bank. That marked the first monthly increase in the tools since February of 2020 and took the outstanding value of the PSL to 2.65 trillion yuan, which when you look at it, they've been trying to pull things down because this is not a tool people like. This is kind of a last resort to push things through. So as you had that money coming through, it's no surprise to see that continue on. But how is that, again, going to interface with trying to get borrowing back up, given some of the issues that we're going to highlight now? So the Chinese new loan cumulative continued to grow, aggregate financing back to 2020, but you can see there was still a significant amount of unused debt in 2021. And there continues to be a lot of unused debt in 2022. So the question's really, how real are these numbers? Because they may be on an aggregate, but on a net level, they're really not to the same degree, which is being shown here when you look at China's facing some of that deflation, the deflation debt threat. When you have some of these movements coming through, and a lot of this is being driven just by, again, no local consumption, which is driving down prices as people pull back and just spend exactly what they need, not more. Manufacturing goods inflation also is now in deflationary standpoints. But again, there's not a lot of buying, which is leading to a significant amount of capacity being left on the shore. China developers have relied on pre-sales and financing from home buyers, and you can see here that is sold in advance. Total sold is coming down. Real estate developers' deposits and advance payments plus mortgage as a percentage of total, you can see also coming down. But again, it's still elevated, but moving in the wrong direction, and it's unlikely, given how the consumer is positioned, for this to adjust in any meaningful way, which is going to put more pressure on the banks to fill the void as the consumer refuses to do a lot of these sold in advance and these deposits. All the while, when you look at past stimulus, has led to surging home prices, and we're just not going to get that this time. And this is the biggest issue: is home prices have been the biggest driver of consumer activity in economic growth on the local side. And we're not going to get that type of correlation this time because of this overhang, because of these underlying issues, all of which is leading to China's home sales stay deep in contraction despite policy easing measures as the sharp downturn in property investment continues. So all of this is just compounding, where they're trying to drum up this activity. They're trying to get the consumer involved, and none of it is working. which is something that's going to have to be addressed post the Congress that kicks off this weekend. All the while, South Korea Bank raised rates. As you can see, the Bank of South Korea just is trying to get in front of inflation, trying to push things higher at this point in time. Japan real household spending went up in August, but we know it came down in September, and the yen continues to weaken despite Japan's intervention, with the dollar-yen breaking above that 145 resistance level. And again, the BOJ is out of bullets, and they've been doing this since the 1998, and we're starting to see again that end of QE, which, when you look at the two countries, the BOJ and the BOE are showing the issues that continue to happen throughout the region. As South Korea current account balance is now negative, South Korea goods trade balance is now the lowest it has been going back to 2001. All of this comes back to Taiwan and what we were talking about there, where trade is slowing, activity is slowing, and a lot of this is really showing up in these Asian areas that are very heavily related to intermediate goods, finished products, and more importantly, tech and semiconductors, which we see getting much worse. East Asian export orders signaling weakening global demand. Again, following on the back end of that, PMI reports show shrinking export orders in Taiwan and South Korea, which are leading indicators, again, for where a lot of this global trade is going to go, which is clearly negative, with Japan's trade balance, again, coming in the lowest it's been since going back to 2001, as it took out the low from 2014. And this is when you look at the S&P Global India Service Activity Index, again, rolling over a bit, still expanding, but obviously at a much slower rate as we see Asia getting worse. That's what we have for you today. If you have any questions, please feel free to reach out to us. We love your feedback. Please, again, like, share, subscribe, share what we're doing. We think it's good data, and hopefully I explain it the best I can. I know it's data heavy and it doesn't have the same type of mass appeal, but I think this is what people need to learn and kind of focus on in terms of where this is going to go over the next few years. So thanks again for watching. I'm Mark Rossano, founder and CEO of C6 Capital Holdings, coming to you from Primary Vision Network.